Day trading. Step-by-step strategies to master trading basics. A complete guide for beginners on how to day trade with strategies to become a successful day trader. Clayton Rosenbaum. Chapter 1. Fundamental Analysis. Fundamental analysis is a method used by investors to evaluate the intrinsic value of a security by analyzing the underlying factors that affect its underlying business, industry, and economy. Unlike technical analysis, which focuses on price movements and market trends, fundamental analysis examines qualitative and quantitative factors such as financial statements, economic indicators, industry trends, and competitive dynamics to assess the health and future prospects of a company and its stock. In this chapter, we will delve into the intricacies of fundamental analysis, including its key principles, tools, techniques, and applications in investment decision-making. Key principles of fundamental analysis. At the core of fundamental analysis are several key principles that guide investors in evaluating the value and prospects of a security. One fundamental principle is that the intrinsic value of a security is determined by its underlying fundamentals, such as earnings, cash flow, and dividends. Fundamental analysts believe that the market price of a security may deviate from its intrinsic value in the short term due to market sentiment, speculation, and other external factors, but over the long term, the market tends to reflect the underlying fundamentals of the company. Another key principle of fundamental analysis is that the value of a security depends on its future cash flows and earnings potential. Fundamental analysts use various valuation models and techniques, such as discounted cash flow, DCF analysis, price-to-earnings (PE) ratio, and price-to-book (PB) ratio, to estimate the intrinsic value of a security based on its expected future earnings and cash flows. By discounting future cash flows back to their present value, investors can determine whether a security is undervalued, overvalued, or fairly valued relative to its current market price. Fundamental analysis emphasizes the importance of conducting thorough research and analysis to gain insights into the qualitative and quantitative factors that drive the performance of a company and its stock. This includes analyzing financial statements, such as income statements, balance sheets, and cash flow statements, to assess the company's profitability, financial health, and growth prospects. Fundamental analysts also evaluate industry trends, competitive dynamics, regulatory factors, and macroeconomic conditions to understand the broader.
Sample complete. Ready to continue?